Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the peak buy sell indicator. Alright, the peak buy sell indicator is a custom indicator. So if you want to make use of it, you'd have to download the indicator externally and then add it to your MetaTrader platform, specifically in the indicators library. Okay. So I'm just going to be inserting the indicator to the chart right away because I have already downloaded it. And here we go. All right, so this is how the indicator looks like. This is the peak buy sell indicator. Okay. Now this indicator helps Forex traders to identify market reversals. All right. When a reversal is about to happen, the indicator gives you a signal. As we can see, we have both red line and green line. All right. I want to believe you're already guessing what the red line represents and what the green line represents, and I think you are right in what you're guessing. Basically, when you have the red line above the 15 level, as you can see this 15 level indicated by the indicator, and you have the red line above it, there is a chance that a bearish reversal could happen soon. All right, and then when the red line crosses below the 15 level, it's a sign to enter a sell. All right, it's a sell signal basically. On the other hand, when you have the green line cross above the 15 level, it's a sign that we could have a bullish reversal soon. And then finally, when the green line crosses below the 15 level, then it's a buy signal. So basically, this 15 level is the level that tells us when a reversal is about to happen. Okay, basically, when the green line, the signals are very easy to interpret, right? Very easy to interpret. Just pay attention to the colors of the peak buy sell indicator. The green line gives you buy signals, the red line gives you sell signals, but basically the way the signals are given are the same, right? The way the signals are given are the same. The green line enters into the reversal territory. I'm going to call this the reversal territory. So the green line enters into the reversal territory, and when it starts pointing downwards below the 15 level, as it cuts below the 15 level, once that crossover happens, then you have a buy signal. All right. On the other hand, when the red line enters into the reversal territory and the line cuts or crosses over the 15 level downwards, you have a sell signal. So when you got a buy signal, you can just go ahead and enter a buy after you've gotten a confirmation. Now, there are a couple of ways you can get confirmations. The first is to look for candlestick patterns. All right. For example, you can see how here we had a bullish candlestick pattern here. You can see this pin bar, right? You can see this pin bar here. So this was a confirmation that this bullish move is about to happen. All right, this was a confirmation that we were about to have a bullish move. Okay, so if you had entered a buy around here, you would have considered setting your stop loss just below this candlestick pattern, and then your take profit could have been at the nearest resistance zone. Okay, so that would have been a good catch. We would have caught somewhere around 270 pips. Okay, then as for this sell example, once we got the signal, we'd have considered entering a sell around here, setting our stop loss above the swing high, and then for our take profit, we could have decided to use this support zone. In this case, it's going to be a support zone, right? So I've considered using this support zone to exit. Okay, so that would have given us somewhere around 250 pips, right? So that's also a good catch. So basically, using this indicator is very easy and it is straightforward. So even if you are a complete beginner, you can be able to use this indicator effectively. Now, note that there is no indicator that guarantees profit. All right, No indicator is foolproof, no strategy is foolproof. The indicator cannot guarantee 100% win rate. All right. So there are some situations whereby the indicator might give a false signal. Okay, because the market will always, do what it wants to do. Right. So some situations, the signal might not always play out as expected. Okay. Now I'm going to talk about confirmations. Okay, it's important that you confirm your signals, right? It is important. Okay, so what we mean by confirmations is that when you have a signal, for example, from the peak buy sell indicator, you can use any other indicator of your choice to confirm the signal. You can make use of trend lines, right? You can make use of trend lines in addition to support and the horizontal support and resistance zones. Okay, please pay attention to horizontal support and resistance zones. Those are very, very important zones on your chart. So in addition to those, you can also add other indicators such as the moving averages, or you can use RSI or stochastic or parabolic SAR, any other indicator of your choice actually, just to confirm the signals, right? So we can see that when the indicator gave us a sell signal here, we got a confirmation both from the trend line and from the moving average around here. Okay, as we can see that the price dropped below the moving average and still dropped below the trend line. So we had a confluence around here, right? We had a confluence around here. And then for your exit strategy, you can actually decide to use any other indicator of your choice to confirm your exits. Your exit might not necessarily always have to be at support levels for a sell or at resistance levels for a buy, right? You can decide to use a trend following indicator like the moving average to determine your exits, okay? If you are trading in the direction of the trend, because sometimes you might exit at a support and you'll find out that the price will continue to go in your direction and you're going to leave a lot of money on the table. So instead of just exiting at the support, you can confirm your exits with other indicators, right? You can confirm your exits with a moving average, for example, right? And then you can also just add on support and resistance zones, to know how price is behaving around those levels. Okay. So basically that is it, right? That is it. Always make sure you use good risk to reward ratios. Do not risk more than 2% of your capital in one trade. And I will recommend a risk to reward ratio of 1 to 2. So if you're risking $1, your profit target, ideally should be a minimum of $2. Okay, so that even if you have equal number of wins and losses in terms of number of trades, right, you're still going to be on the winning side. Okay, I hope you found this video insightful. Kindly like and subscribe for more trading insights, and do not forget to hit that notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading. I hope to see you in the next video.